I remember I bought some shares of SPY right around 480. RSI way oversold. The VIX was spiking. You know, one of the best indicators of a market hitting the bottom is the VIX spiking. I don't know if you guys talk about the VIX, Dan, but
Mhm.
you're not going to get many spikes like this. And when the VIX spikes like that, you better be ready to back up the truck and buy the market, um, because the market moves inversely to the VIX. Here's that bottom. This is right here's the market bottom. That's when the VIX was spiking all the way up here. So yeah, over time, I've been doing this for over 30 years. These things tend to repeat over and over again. We're human beings. We're all trading in the market, and we all have fear and greed. And fear and greed always presents itself the same way at extremes. And the same thing happens all the time. People say, well, it's different this time. I'm selling all my stocks. This time it's different. And that's exactly when the market bottoms. I mean, you can use these indicators to really help you decide when it's time to get in. Now, the top is the top is harder to predict. Okay. Usually what you'll get is the market will go slowly, it'll grind higher, grind higher, grind higher, grind higher, and then it'll have that quick, nasty move down. It's harder to pick the tops. But when the market is making bottoms, it's more of I'd say it's not a guarantee, of course, but it's more of a guarantee picking the bottoms than it is trying to pick the tops, because you got the VIX spiking, you got the RSI going into oversold territory. It's easier to get in on the long side after really nasty sell-offs like that when the VIX is spiking. So you got to use these things that are at your disposal to help you with your somewhat directional trading. Even when the market was bottoming here, I wasn't buying so much outright calls. I was still selling puts and selling put spreads, which still worked. As the market went up, I wouldn't make unlimited amounts of money because I'm not buying options. I'm selling options, which have a finite profit, but it still worked. So I'm still very conservative. When the SPY was here at 480, I was selling put spreads down here and selling puts down here. And when the VIX comes crashing back down, the volatility of those options come crashing too, so they decay that much quicker. So it's great to use the charts and the VIX and your indicators to give you an idea of what's happening. So that's pretty much the way I do it. So charts are the most important thing to me. Getting a handle on technical analysis is, in my opinion, the most important thing with any kind of trading. You need to learn how to read the charts. You need to learn how to find support. You need to learn how to use the moving averages. I know for some of you that follow me on YouTube, I only use 3 moving averages: 20-day, 50-day, and 200-day, and the RSI down here. Those are the only indicators I use, and they have served me well over time. On some of my charts, I'll have the Bollinger Bands, which are good as well. But it's mostly I'm looking for extremes. I'm looking for extremes like this. Here's an RSI way oversold. The price action's almost going vertical to the downside here. These things don't last that long. That's just how the market is. The market was meant to continually go up over time. You're never going to show me a stock that increases its earnings and revenue every month, every quarter, and the stock goes down. It just won't happen. So if you're following good stocks and the stock and the companies are pumping out accelerating earnings each quarter, the stock's going to follow eventually. So you just kind of have to know these things, and then you make your option trades accordingly.